Hello and welcome to Donartian Investment. This analysis is for Grab Holdings on NASDAQ as of 4th of August 2026 with a share price of $3.69. The full report is on donartian.ca. Grab is a long-term buy. Southeast Asia's leading super app just confirmed its profitability inflection, trades cheaply on enterprise value to revenue, sits on billions in net cash, and announced a $750 million buyback. But the near-term call is hold across both the short and medium horizons. The tape is still in a downtrend below the 200-day average, and an emerging market macro headwind works against a company that reports in US dollars. Own it for the long run. Wait for a confirmed turn to add. Grab runs Southeast Asia's leading super app across 8 countries, mobility, food and parcel delivery, and a fast-growing digital finance arm with licensed digital banks. Second quarter revenue grew about 22% to $997 million, and the adjusted profit margin rose to nearly 17% from just over 13% a year earlier, with adjusted earnings up 54%. The balance sheet holds roughly $6.2 billion of cash, about $4.2 billion net of debt, and management announced a $750 million buyback. One honest caution. The 6-cent reported profit was flattered by a one-off $307 million gain on consolidating its superbank digital bank, so we judge it on revenue and cash economics, not the headline number. On our preferred lens, enterprise value to revenue, Grab trades near 2.9 times forward revenue against a warranted 3.1, fair, leaning cheap for a 20% grower whose margins are expanding. The street is near unanimous, 11 buys against 1 sell, with a consensus target of $6.08, roughly 65% above today's $3.69. That valuation, the confirmed margin inflection, and secular Southeast Asian digital economy growth are why the long-term call is a buy, with the fintech and a possible go-to combination as roughly free optionality. The offsetting caution is that free cash flow is only just turning positive, so this is a name to accumulate on weakness, not a cash return story yet. Here is why the short and medium calls are both hold. The chart is transitional. Grab bounced about 12% off its late July lows and reclaimed its shorter averages, but it still sits below a falling 200-day average near $4.31. So the intermediate trend is down and the breakout is unconfirmed. Relative strength is poor. The stock is around 33% below year-ago levels. Neither our technical nor our catalyst entry trigger is met, which caps the short signal at hold. On top of that, the macro leans against it. The latest read has emerging market equities as a headwind, and a rearmed oil shock lifts fuel costs across the region for a company that earns locally but reports in dollars. We wait for a confirmed reclaim above 406 or a tested bounce into the 318 to 330 support. Now, the other side of the ledger. Bear case $2.90, about 21% downside from $3.69. See Shopee presses in food plus fintech. Go-to deal may fail. FCF only just inflecting. Earnings flattered by one-offs. Now weigh the risk against the reward. The bull case is roughly 68% above today. The base case, the most likely, about 25%. And the bear case, a fall of about 21%. So you are risking about 21 to make 68. So our call on Grab Holdings, on NASDAQ, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donartian Investment at donartian.ca. The link to the full report is in the notes below. Have a great day.